Hey everyone, it's been a wild week with equity markets. The Nasdaq entered correction territory, but the S&P is down single digits off of its all-time high, and investors are starting to get pretty anxious. So what's going on and what can you do about it? Hi, my name is Will Hubbard. I'm founder and portfolio manager for Sierra's Capital. We're a sophisticated, not complicated investment management firm. Markets have experienced turbulence following President Trump's confirmation of tariffs on Canada, Mexico, and China, ending speculation about potential last-minute agreements or any extensions. Further tariff actions are anticipated in the coming months, including reciprocal measures against countries imposing duties on American goods. Investor concerns are really centered around the potential for these trade actions to increase prices for consumers and businesses, potentially hampering our economic growth. And so this anxiety has triggered recent pullbacks across all the major market indices and various sectors. During periods of uncertainty, well-designed portfolios and comprehensive financial plans really demonstrate their value. Similar to previous trade tensions in 2017 and 2018, investors have remained cautious since the president's inauguration. However, historical patterns really suggest that markets typically overcome these concerns over the long term, despite uncomfortable short-term fluctuations. So tariffs represent import taxes that can ultimately affect consumer prices. With inflation already running higher than desired, additional tariffs could further pressure everyday costs. The situation becomes more complex if trading partners implement retaliatory measures, potentially escalating into broader trade conflicts. Context is really important when we're evaluating the current tariff actions. The United States has employed tariffs throughout history, as we had mentioned previously, particularly during the Industrial Revolution and peaking out during the Great Depression. These measures often aim to protect domestic industries, especially in strategically important sectors like technology and those related to national security. So thinking of the chip shortages and weapons and things like that. So it's worth noting that previous tariff implementations during Trump's first administration ultimately led to new trade agreements with Mexico, China, and other partners. The administration frequently uses tariffs as negotiating leverage for broader policy objectives, including immigration control and combating illegal drug trade imports. The S&P 500 has retreated about 5%, and while uncomfortable, pullbacks of this magnitude are really common within financial markets. So similar or deeper corrections occurred twice in 2024, 3 times in 2023, and repeatedly during the bear market of 2022. So despite current trade concerns, many fundamental economic indicators are still positive. Corporate earnings showed decent growth in the most recent reporting season. Unemployment is still historically low, around 4%, and wages continue to rise along with continued productivity gains. So from a risk assessment perspective, high-yield credit spreads remain below pre-pandemic levels, suggesting bond investors maintain a relatively positive economic outlook. So while technology stocks have faced quite a few challenges, other sectors have demonstrated strength in recent months. Diversified portfolios have benefited from this sector rotation, particularly within the non-US space, and bonds have also performed well as interest rates declined, helping to offset equity market weakness in balanced portfolios. So the bottom line here is that recent market volatility has been triggered by trade policy developments, and this represents a normal aspect of investing cycles. Long-term investment success really comes from focusing on foundational investment principles, which is buying good companies that make stuff people buy, and then diversifying that risk with various types of asset classes to produce success over time. So if you're interested in how we do that and approach this sort of problem, please feel free to reach out. In the meantime, I hope you guys have a great weekend, and please remember that anything that we've discussed throughout this video is for educational and informational purposes only. If you have any questions or would like to know more, you can reach out to us or please talk to your advisor. Thanks. Have a great weekend.